Okay, Mr. Chair, we're live.
Good afternoon, everyone, and thank you so much for tuning in for the Local Revenue Subcommittee briefing on tax sales. The purpose of today's briefing is to explore how tax sales are affecting people during this pandemic. Tax sales are an important tool for local governments to collect the revenues they need to provide essential services, including education and public safety. But tax sales also put a financial burden on people who are struggling economically during this pandemic. Tax sales can result in foreclosures and the loss of homes, which poses a serious health risk during this pandemic. This briefing will also provide information about the tax sales process generally. The tax sales are a regular subject of legislation, but there's rarely time to discuss them in depth. This is an opportunity for the members to better understand the process and to get their questions answered. The Department of Legislative Services will provide an overview of the tax sales in Maryland. Then we will hear from the State Department of Assessment and Taxation, which has an ombudsman who will help us homeowners in tax sales. Local government officials with the Maryland Association of Counties and the Baltimore City will discuss how they are balancing the need for revenues with protections for homeowners during this pandemic. Finally, we will hear from advocates for disadvantaged homeowners. I look forward to an informative and lively discussion on these important issues. And with that, if there is no questions, we'll start this discussion off with Stan Ward with the Department of Legislative Services.
Thank you, Mr. Chairman. So I'm just going to provide some general information to sort of set the stage for the discussion today. Next slide, please. So I'm going to just touch on 4 major points. So we're just going to go over what tax sales are, a quick overview of the tax sale process, how the pandemic has affected tax sales, and some data that'll give you a general picture on tax sales in the state. Next slide, please. So tax sales are the process that local governments use to collect overdue taxes and other government charges from property owners. It's important to note that in a tax sale, the property is not sold. The government sells the right to collect the government's debt to a private party. The tax sale purchaser pays the government the full amount of the debt and then tries to collect that debt from the property owner. If the property owner doesn't pay the purchaser, then the purchaser can foreclose and become the owner of the property. It's important to note in Maryland, tax sales are conducted by counties, not by municipalities. Municipal tax debts are collected through the county tax sales. Next slide, please. So why do we have tax sales? Why is that the method that's used to collect these debts to local governments? There's basically 2 advantages. One is that it's an efficiency. So the counties do not have to incur the administrative burden and expense of attempting to collect these debts from property owners. From property owners individually. Instead, the purchasers at the tax sales bear the cost of collection and then recover those costs from the property owner. Also, tax sales allow local governments to receive a large and predictable amount of money every year, instead of all at once, instead of having to wait for property owners to pay over time. So it provides a predictable cash flow for local governments. Next slide, please. So it's important to note that tax sales are not just for collecting property taxes. A lot of different kinds of government debt are collected through tax sales. This varies a lot by county, but some of the other charges that might be collected through a tax sale include water and sewer charges, environmental charges, and that's a broad category that includes everything from animal violations to trash violations, false alarm fees, high grass, all sorts of things, solid waste charges, Bay Restoration Fund, other taxes. So for example, a hotel doesn't pay the hotel rental tax, that could put the hotel property in tax sale, and clean energy loans. Next slide, please. So now I'm just going to do a quick overview of the tax sale process. It's basically 4 phases. The taxes become delinquent, the tax sale itself, there's a redemption period after the tax sale, and then finally foreclosure. Next slide, please. So under state law, generally properties have to go to tax sale within 2 years after the taxes on the property become delinquent. But the actual timing of the tax sale is set by local law. And so it varies by county. But generally, tax bills that are sent in July that are still unpaid the next year would go to tax sale the following spring, usually in May or June. Next slide, please. So the tax sale itself. So as we just mentioned, at the tax sale, the tax lien on each property, not the property itself, is sold at auction to the highest bidder. The tax sale purchaser pays the county the taxes that are due, the interest, penalties, certain expenses, and a high bid premium. Any amount that's bid over the amount required for the payment of the taxes, interest, penalties, et cetera, is then paid to the property owner, but only if the property is foreclosed. Next slide, please. So it's important to note that counties don't have to take all properties to tax sale. They actually have some discretion about this. So there's some different categories of properties that they can keep out of the tax sale if they want to. So that includes any property on which the taxes are less than $250, any residential property for which the taxes are less than $750, a dwelling that's owned by a homeowner who is low income, at least 65 years old or disabled, properties designated for redevelopment, and property that's vacant and abandoned. Next slide, please. So the redemption period. So this happens after the tax sale. So the homeowner the property owner is still the owner of the property, but they are under threat at this point of foreclosure if they don't pay. So they have the opportunity during the redemption period to come forward, stop the tax sale process, and stop foreclosure by paying the back taxes, interest, and penalties to the tax sale purchaser, and also reimburse the purchaser for certain expenses in preparing or bringing a foreclosure action. So this, when the property owner comes forward after the tax sale to pay what they owe, that's called redemption of the property. So this redemption period continues until the property is finally foreclosed, which takes a while after the tax sale itself. Generally, foreclosure cannot even begin until 6 months after the tax sale. The tax sale purchaser has to bring a foreclosure proceeding within 2 years after the tax sale, or they lose the right to foreclose. Next slide, please. So in addition to paying the back taxes, there's some other costs that the homeowner has to, or the property owner, I should say, has to pay in order to redeem their property after a tax sale. One is interest. So the tax sale purchasers earn interest on the property owner's debt. This interest rate is set by the counties, and the interest rates vary by county. So they range from 6% per year to 20% per year, depending on the county. The property owner also has to reimburse the tax sale purchaser for certain expenses of the purchaser in preparing or bringing a foreclosure action. So these expenses might include a title search fee, postage and mailing, attorney's fees, and certain other costs and fees. So these fees can add up to thousands of dollars and actually be much larger than the actual tax debt that gave rise to the tax sale in the first place. And these fees can be a major barrier to redemption. Next slide, please. So the final phase of the tax sale process is foreclosure. And I should mention here that actual tax sale foreclosures are not common. The vast majority of properties are redeemed before foreclosure. However, they do occur. We don't know how frequently they occur. Nobody keeps that data, but we are trying to get data on that. But the vast majority of properties are redeemed before foreclosure. So if it gets so far as to foreclosure, the action is filed in the circuit court. Notice has to be given to all persons with an interest in the property, including the owner, any mortgagee, and any tenant. Anyone with an interest in the property can stop the foreclosure by paying the back taxes or contest the validity of the tax sale in court. And then if the court actually does foreclose, then ownership of the property transfers to the tax sale purchaser, and the purchaser can take possession of the property and evict the former owner or occupant of the property. Next slide, please. So the pandemic has had a major impact on tax sales in Maryland. The Chief Judge of the Court of Appeals stayed all foreclosures of residential properties, including tax sale foreclosures, starting on March 18th, 2020, due to the potential for undue hardship during the pandemic. However, that stay was lifted as of July 25th. 19 counties have actually postponed or canceled their tax sales this year. However, some counties have moved forward with tax sales this year or will do so before the end of the year. Also, there's going to be foreclosure proceedings from prior years that are still working their way through the process. So it's very likely that there are foreclosures going through the courts as we speak. Next slide, please. So the last portion of my presentation is just going to go over some data to give you a general picture of tax sales in Maryland. And I want to thank very much the Maryland Association of Counties and local tax officials who provided this data voluntarily at the request of Chair Kaiser last year. So that data is the basis for everything I'm going to say for the rest of the presentation. So thank you for that. Basically, just here's some basic information. So 21 counties actually do collect water and sewer bills through the tax sale. The counties that don't do that are Charles, Montgomery, and Prince George's. Half of the counties collect environmental charges through tax sale. The total number of properties that were offered for sale in 2019, which is the most recent year we have, was 21,000 statewide, of which 16,000 were sold. So in 2019, at least 4,000 owner-occupied properties were sold at tax sale. And I say at least because only 13 counties were able to break out for us owner-occupied properties from all other properties. So the actual number is much higher because we only got 13 counties worth of data on this, but at least 4,000 were owner-occupied that were sold. Next slide, please. So the total amount of liens that were offered for tax sale in Maryland in 2019 was actually 208 million. The total amount of liens sold, however, was only 50 million. And that very large difference was due almost entirely to Baltimore City, which offered 170 million in liens, but only sold about 20 million of them. The vast majority of liens that were offered for sale in the city cannot be sold because the lien exceeds the value of the property. These are typically vacant and abandoned properties, but not always. The average lien amount for all properties that were sold in 2019 was about $3,000. And the average lien amount for owner-occupied properties sold in 2019 was about $2,500. Again, that's just in the 13 counties that reported on owner-occupied properties. Next slide, please. So this chart just shows you what counties have done in terms of setting the threshold for the amount of taxes that will take your property to tax sale. So remember, they have discretion to set that threshold. So in 5 counties, all properties go to sale regardless of how small the debt is. Most counties set the threshold at $250. We have 10 counties who are there, and 4 counties are at $750. And again, this is for residential properties. So that's just gives you a sense of what properties the counties are putting in tax sale. Next slide, please. So this slide shows you how the number of properties that are going through the tax sale process declines over time. So the law requires that properties be advertised for sale 4 weeks before the sale is held. In 2019, there were actually 50,000 properties statewide that were advertised for sale, but a lot of property owners paid up during those 4 weeks before the sale was held. So the number offered for sale was only about 20,000. And then the number that was actually sold was about 16,000. Next slide, please. So this chart breaks down the number of properties that were offered for sale in 2019 by county. So you can see Baltimore City by far led the state with over 9,000 properties offered. Prince George's was second with just under 3,000. Baltimore County was third with 2,000 properties, and then Anne Arundel was fourth with just under 1,000 properties. Next slide, please. So this chart just breaks down the same information in percentages. So in 2019, Baltimore City accounted for 45% of the properties offered for sale. Prince George's County accounted for another 13%, Baltimore County 10%, and then the rest of the state was a third of the properties offered for sale that year. Next slide, please. So this chart breaks down the total lien amounts that were sold at sale in 2019 by county. And again, you can see this pattern is the same. Baltimore City led the state with about 20 million in liens that were sold. Prince George's was second with about 9 million in liens. Baltimore County was third, about 8 million in liens. Anne Arundel County was fourth with about 3 million in liens. And the rest of the state was much less than that. I should mention here that Calvert, Montgomery, and Wacomico counties didn't report this data. Next slide, please. So this chart breaks down the owner-occupied properties that were sold in 2019. So a third of those of the properties that were sold in 2019 roughly were owner-occupied. Again, this is just in the counties that reported data on owner-occupied properties. So it's just in those 13 counties, but it gives you a sense. Next slide. So this chart shows the redemption interest rates that have been set by counties. So you can see there's a wide range here. Everything from 6% to 20%. So 4 counties are at 6%, 6 counties are at 12%, and 2 counties are at 20%, and those are Montgomery and Prince George's counties. Next slide, please. And so this slide just is intended just to give you a sense of the high rate of redemption for properties in tax sales. So in 2018, 85% were redeemed, and in among all properties, and among owner-occupied properties, 93% were redeemed. This is imprecise because it only includes properties that were redeemed in the same year in which they were sold. Some properties are going to be redeemed in subsequent years, so the actual redemption rate is probably higher than this, but it just gives you a sense. So that concludes my presentation, Mr. Chairman. If there's any questions, I'm happy to try to answer.
Thank you so much. If there's any questions, please use the chat to be recognized, or feel free to text me. And I admit for not recognizing our chairwoman, who's also on the call this afternoon. Ann Kaiser, thank you so much for being here. I just
Thank
have
you,
one
Mr.
question.
Chairman.
Thank you so much. I just have one question for you, Stan. You had stated that there were 19 counties that postponed tax sales. Do you know which counties they were?
Yeah, so MACO is actually going to provide that information for you. So they're coming up and we'll be able to give that. And I believe the tax sale ombudsman may also touch on that. So yeah, if you want to know more about that, ask them.
Okay. Delegate Philmark.
Thank you, Mr. Chair. Thank you for the presentation. I don't know if you have this information or if anyone else may be able to address it, but is there any, I was struck by the range in the caps on interest rates that can be charged. And I'm wondering if there's any correlation between the interest rate and the county's success rate in selling the liens.
Yeah, that's a great question. I think that's an excellent question for the MACO panel and Baltimore City, who I'm sure can give some insight into how they choose the interest rates.
Delegate Polakovich-Carr.
Thank you, Mr. Chairman. Thank you for the presentation. So I'm just curious, like, are tax sales something that most states do? Are there other alternative policies that other jurisdictions have pursued?
Yeah, that's a great question, and I can talk about that a little bit. Pretty much every state has some form of tax sale, but exactly how it's conducted does vary. So in Maryland, we sell the liens rather than the properties themselves. In some states, however, the counties or the local governments make every effort they can to collect the debt, and then they sell the property itself after a specified period of time, usually years after the debt becomes due. One way in which Maryland is unusual is that our redemption period is shorter than most states by far. So we have a 6-month redemption period that can be longer, but in other states, it's often years. So that's one way in which we're different. But I think that was that issue, the redemption, the length of the redemption period, and then also our practice of selling liens as opposed to selling the property itself are what make our systems a little different.
There are no other questions. Thank you, Stan, for your presentation. And we will now hear from the State Department of Assessment and Taxation, Corbin Webb and Robert Yeager. Whichever one of you all want to go first.
Great. Good afternoon, Delegate Barnes, Delegate Kaiser, members of the committee. Thank you for allowing us the opportunity to present today. I'm Corbin Webb, Associate Director of SSTAT, and as you know, this legislation was passed last year, which required our department to create a new office of the State Tax Sale Ombudsman. When designing the office, we immediately recognized that the Hogan administration's customer service promise needed to be front and center, and we let that commitment guide the decisions we made. Prior to having a tax sale ombudsman, our department really had no knowledge or experience dealing with tax sales, but when conducting interviews for that position, it was clear that Bob Yeager was up to the task. And before I turn the presentation over to Bob, I just want to emphasize really how tremendous of a job he's done getting the office up and running before 2020, handling inquiries in early 2020, and then continuing to respond effectively despite the many challenges caused by COVID. And kind of relatedly, our customer service contact manager, whose team assists with tax sale inquiries, was actually recognized with a Customer Service Hero Award this past May at a BPW meeting on behalf of that team. I really think it's safe to say that this team's living up to the administration's customer service promise. And with that, I'll turn it over to Bob for the presentation.
Good afternoon. I'm Bob Yeager, and I'm the State Tax Sale Ombudsman at the Department of Assessments and Taxation, where I help Maryland homeowners navigate the tax sale process, and I collect data on tax sales throughout the state. I feel very fortunate to be able to help homeowners in what can be a very complex and overwhelming situation. So I want to thank the subcommittee for the opportunity to share what we've accomplished these first 9 months, to talk about how COVID has affected tax sale, and to share some of our future plans. I'm very interested in using the insight we continue to gain to explore and create new tools to meet the needs of homeowners. Next slide, please, Sarah. The main tools we use to help homeowners are our phone helpline, our email, and our website. The phone helpline is how we hear from homeowners most often, but the email address is most useful for sending follow-up reminders of what was discussed on the phone. We continue to expand our tax sale help website that features helpful information and resources, as well as tax sale related updates. We're very proud that if you search Maryland tax sale online, our website is the first result. This has become an important way that many of our homeowners discover our service. The website contains over 75 resources to assist homeowners, and many of our partner service providers have shared with me how they regularly consult our website as a convenient, easy-to-use resource for information and updates. Next slide, please. In our first 9 months, we've helped hundreds of homeowners deal with delinquent tax bills and related issues. We're 900 phone calls and over 200 emails, and we expect these numbers to increase as more homeowners become aware of our service. We routinely call back a small number of homeowners to gauge their experience and our impact. Next slide, please. Here's an example of how it works. Recently, a homeowner called because she'd received a notice that her home was on the list for her county's upcoming tax sale. She was very upset and believed that she was about to lose her home. She and her husband had received the homeowner's property tax credit in prior years that covered their entire tax bill. But last year, her husband passed away and she didn't apply, so her unpaid tax bill was considered delinquent. First, I explained that the tax sale sells a lien on her property, and while this would put her home at significant risk, she'd still own the home right after the tax sale. Since she was 70 years old, she could still apply for the prior year's tax credit. So I worked with the Tax Credits Division to help her apply for the 2019 and 2020 tax credits and to process her applications prior to the tax sale. She received the credit for both years, and the county removed her home from the tax sale. I also referred her to a local financial counselor to help her manage her finances. As we do with all our homeowners, I let her know that if at any time she has questions, is not sure what to do, or needs further assistance, to please call us back. She was extremely grateful, and homeowners continually share how much they appreciate the time we take to listen and help them, often when they feel that no one else will. Next slide, please. Our partner service providers are a critical part of how we help homeowners. We've identified and developed a wide range of partnerships across the state with over 75 local and regional service partners. These include housing nonprofits and community-based organizations, local housing and financial counselors, and legal service providers, as well as financial assistance programs and governmental service providers. Next slide, please. Here's an example of how this partnership works. A homeowner recently told us that a lien on their home was sold in tax sale, but he was having difficulty redeeming because the title was in his mother's name and she'd passed away 2 years ago. When I found a local legal services provider, he expressed that he'd had a bad prior experience with a lawyer and he felt that they hadn't understood his situation. So I called the legal aid office, shared the homeowner's situation with the chief attorney, and he was able to work with the homeowner to address his issues. Next slide, please. Other government stakeholders, particularly the county finance offices, are also important partners in our mission to help homeowners, and we've developed strong working relationships with each of them. Since the spring, I've been invited as a standing guest at the bi-monthly meetings of the Maryland GFOA's Tax Affinity Group, where county finance officers share tax collection updates, and we discuss strategies for issues that we and our homeowners are facing. I'm also honored to be serving on the Attorney General's Access to Justice Task Force's Housing Security Committee and Homeowners Subcommittee, where we share and discuss COVID-related impacts on homeowners, particularly in vulnerable communities, and potential strategies to assist them. These discussions continue to provide important insight into the many considerations in improving our assistance strategies. Next slide, please. Here's another example of how we work with the counties. Recently, a homeowner called us saying that they shouldn't be on the tax sale list because they'd already paid their tax bill. The county's public website showed the bill was paid, so we contacted the county, who confirmed that the payment had been received and that it had come just as they were creating their mailing list for the tax sale notices, so the homeowner could disregard the letter. The counties not only help us resolve homeowners' issues, but we regularly exchange new information, observations, and insights that lead to improvements. Next slide, please. So in addition to helping homeowners, the second major thing our office does is data collection and reporting. Currently, we're in the final stages of conducting our first annual tax sale survey of the counties. The 50-question survey asks about each county's tax sale processes and policies, and for detailed data on properties in their tax sale this year. It also collects data on bid balance excess funds, as well as redemption and foreclosure data. While our deadline for survey responses was August 31st, currently several counties are still working to provide all the requested data due to their delayed tax sale dates coinciding with the new tax billing cycle. We continue to work with them to collect their complete responses as soon as they are able. We also compile data on the homeowners we've helped, how they found us, where they're located, their needs, and how we've helped them, as well as how to contact them to follow up. We'll include both the county survey responses and our homeowner help data in our first annual tax sale report, which we'll publish in November. Next slide, please. Now I'd like to talk about the effects of COVID-19. The most obvious effect of the pandemic on tax sale this year were the tax sale schedule changes across the state. Of the 23 tax sales originally scheduled for this year, Wicomico County has their sale every other year. 5 counties held their sales on time, 8 delayed their sales, 4 have postponed indefinitely, and 7 have canceled their sales until next year, with this year's final tax sale happening today in Baltimore County. These changes happened gradually, and we've maintained an updated schedule on our website while sharing the changes with our homeowners. We've also seen county finance offices improve safety for customers and staff, creating drop boxes, appointment systems, and even a drive-through window to help homeowners pay their bills, as well as adding payment flexibility for homeowners. Because of the canceled and delayed tax sales, many homeowners have not had to address their unpaid taxes this year as they would have in other years. This may have an impact on future tax sales. Next slide, please. Finally, while we're proud of what we've done in the past 9 months, we plan to further refine and improve our service. We'll analyze the data we've collected to make improvements based on that insight. We'll conduct targeted and joint outreach efforts with partner service providers to promote our service to homeowners. We want to link our website to social media where we can reach the younger friends and relatives who often assist our older homeowners. We'd also like more infographics and video elements on our website and to make it easier for our homeowners to read, particularly on smartphones. Finally, we plan to explore new tools and creative process improvements to help homeowners better manage their tax bills, both now and in the future. Next slide, please. Thank you for the opportunity to share what we do at the State Tax Sale Ombudsman's Office. We look forward to working with you.
Mr. Yeager, I want to say that I am very impressed of the work that you have done in a short period of time, especially when you look at the 900 phone calls that have been received and the 200 emails. Can you tell us, what are you doing to market or let homeowners know here in the state of Maryland that you're existing?
Currently, the main way that homeowners find out about our service is our contact information is listed on every tax sale notice that a homeowner receives. So when a bill becomes delinquent, each county is required to send what's called the final bill and legal notice to a homeowner 60 days prior to the tax sale to inform them that of what their current bill is, and that if no action is taken, that they'll be included in the upcoming tax sale. So our information is prominently placed on that, and that's initially what generated the majority of our calls. In addition to that, as I mentioned, the website is now a top search result, the top search result when you search for tax sale, and many homeowners now contact us saying that they found our information on our website.
Okay.
We're also exploring outreach. We plan to explore outreach efforts in the coming months.
Very good. And then my last question is, you mentioned delayed or canceled tax sales. What would be some of the reasons to delay or cancel that tax sale?
Well, initially, when the tax sales generally happen in the spring and early summer. So when the pandemic hit, there was a concern that homeowners may not be able to pay their tax bills, and there were many issues that really, I think maybe the counties can share their perspectives on what was involved in their decision making. But there was a general idea that for many counties, delaying the tax sale date would allow homeowners to have more time to pay their tax bills or assemble the funds and make arrangements to either apply for tax credits or whatever they could do to avoid being included in the tax sale. And they wanted to enable give that extra time for the homeowners to resolve the issues.
Okay, thank you. I know we have several members that have questions, and I want to start with Delegate Long. You need to unmute yourself.
Thank you. Thank you for this presentation. I was just sitting here thinking, given the pandemic and what it's caused, the problems it's caused for homeowners, has any thought been given to helping homeowners maybe obtain a reverse mortgage and possibly setting it up where their reverse mortgage will pay their property taxes for in the future? Because I know that it's a good tool for a lot of homeowners and own their homes. I just think that would be something that would be interesting to look into, because the last thing we want to see is seniors losing their homes for tax sale. If we utilize the reverse mortgage, would be great.
Yes, we have had that discussion about reverse mortgages in several forums I've been involved in. There is many criticisms of reverse mortgages as there are praise of them. I think one of the biggest criticisms that we hear is that it is a tool that removes the ability for someone to pass on generational wealth to the next generation by sort of giving up the value of the property after the reverse mortgage taker passes away. I think there are certainly options out there that we could explore as far as working with a lender to fill the gaps that are needed with homeowners who would not qualify for any sort of credit or or other strategy.
Even possibly a second mortgage. If someone has a mortgage, they could possibly, if some way we could help work with them to be able to obtain a second mortgage to pay their taxes. I mean, it's just some ideas. I know we have a lot of moving parts with this, and we've got to do whatever we possibly can to get this taken care of. Thank you.
Thank you.
Thank you. Delegate Ivy.
Thank you, Mr. Chairman. You did ask the question that I was wondering about, which was the outreach that you all were planning for Prince Georgians and other individuals who are affected by tax sale. You did answer it, but you also did mention that you all were planning to look at other ways that you could reach out. If you could go over some of those, that'd be wonderful.
Certainly. What we're hoping to do is get a sense of where we could target an outreach effort based on the data that we receive from the counties. We want to create a map, sort of a heat map that would show where the concentrations of tax sales are located. And then there are many sort of partnerships that we can pursue with local community groups who currently reach out to the communities. And we've been told in several forums, particularly in the Access to Justice Task Force groups, that local community representatives believe that the best way for us to reach those communities would be to collaborate with them on their outreach efforts, and it would allow us to gain a foothold in communities where they already have relationships. And so we're looking to explore those options once our data reporting season ends in November.
Okay. All right. I'm looking forward to hearing some of those other ideas as well. Just looking at the overall number, it's a relatively small figure in comparison to some of the other numbers that we throw around. And so, I know that these individuals need help, and you do as well. And so if there's any other way that we can increase the number of people coming through your office and receiving these resources, please, let's do that.
I certainly will.
Are there any other questions for the State Department of Assessment and Taxation? Seeing none, Bob, we thank you so much for your presentation. I believe you're doing an outstanding job, and if there's anything you need from us, just let us know.
Thank you, Delegate Barnes. Much appreciated.
Thank you. Next up is the Maryland Association of Counties. Kevin Canali and Danielle Lewis.
Thank you, Mr. Chairman. I am trying to get my video back up, but I will go ahead and start while I try to work out this technical issue. First of all, thank you very much for inviting us today. I'm happy to be here, happy to see all of you. I hope you're all safe and well. Just speaking about the pandemic and how counties are responding. Counties, as you all know, really are on the front lines of the pandemic. And as we work to protect our residents, local businesses, and economies from the detrimental effects of the pandemic, counties are making significant financial investments to address immediate public health and safety needs. From working to ensure a safe and secure general election, to launching innovative programs that are designed to provide needed relief to our residents, local businesses, and communities, counties have really stepped up across the board. At the same time, though, we are bracing for massive and unprecedented declines in revenue as a result of the expected economic downturn. Once those federal benefits dry up, we're concerned, and we're advocating for Congress to provide direct and flexible federal funding to the states and to the counties. When it comes to tax sales, as you're all aware, state law does mandate that counties sell tax liens to collect delinquent taxes and other fees owed to the county. Counties find tax sales, or specifically the potential for a property to go to tax sale, as a very effective means of last resort to collect overdue tax bills and other fees that are owed to local governments. Of course, no county wants to see a property go to tax sale if it can be avoided. And to that end, counties are working to ensure that homeowners receive counseling, education, information, and more time when appropriate to help them pay on time and avoid going through tax sale. As Stan mentioned earlier, the vast majority of liens are redeemed before foreclosure. And I also would like to give a shout out to Mr. Yeager and his office, who I think have done a fantastic job in a very short period of time. And that office is working very well with counties. It's been very beneficial for us all. So in response to the pandemic, counties have taken several actions to provide relief to property owners. Just a few examples. As you heard earlier, many counties delayed or canceled tax sales to provide our residents with more time to pay outstanding bills and to ensure that they're aware of programs that are available to provide counseling and assistance. Of course, we also may have delayed or canceled those tax sales to make sure that we were able to conduct them at a later date in a safe manner. We've seen drop boxes and drive-through services for residents to pay their tax bills. Frederick County raised the minimum tax sale threshold to help remove a large group of utility.
Did we lose Mr. Canali?
Financial hardships amid the pandemic. Kent County is waiving interest on any past due tax bills. Several counties have given taxpayers the options to make partial property tax payments to ease that burden a little bit. And I will say that legislation in 2020 to collect more data that will provide a more complete picture of tax sales in Maryland, we think is a great and effective tool to give us, more of that data, provide the big picture. So some of the data, as you heard earlier, we don't have on owner-occupied properties. I think really providing the state tax sale ombudsman and really a clearinghouse at the state level to collect this data is going to do wonders as we move forward and we're able to see how this all pans out. I'll say that we welcome the opportunity to work with the Ways and Means Committee and this Revenue Subcommittee to further refine the tax sale process while balancing the interests of property owners, investors, and local governments. And earlier you were talking about some of the ideas to reach out to residents. I think similar to census efforts, trusting, with trusted community partners, really out there in the field, reaching vulnerable populations that may not have access or may not be aware of some of these programs. I think reaching out to our trusted community partners can do wonders to make sure that we're providing this information to all of our residents. And I do have with me two tax sale experts, Diane Fox, who is the director of Frederick County Treasurer's Office, and Daniel Lewis, who's the Treasury Manager in Frederick County. I know we also have a panel from Baltimore City. Diane and Daniel may have some comments, but they can also answer any technical questions that anyone may have. And we are happy to take any questions. And again, we appreciate the opportunity.
I appreciate it so much. Is Danielle Lewis speaking or just answering questions?
Dan, do you have any comments, or would you prefer to just answer any questions if they come up?
We can just stick with questions. Thank you.
Okay. Does anyone have any questions at this time?
There we go.
Well, I don't see any hands being raised right now, so I really appreciate it.
Mr. Chairman, I have a question.
Okay, go ahead.
Thank you, Mr. Chairman. Kevin, so I haven't been as involved in the tax sale issue, obviously, as Chairman Barnes has and Chairman Kaiser and the folks that are on the local revenue subcommittee. So let me ask a kind of fundamental question. I'm sorry if this is a dumb question, but are there any other areas of taxation where we force counties to go after people in this kind of way? I mean, if you're delinquent in your income taxes, we don't lock you up in jail anymore. If you're delinquent in sales taxes, I don't believe we confiscate your store, right? So is this the only form of this kind of punitive tax liability recovery mechanism that still exists in the state?
So I believe it is. And again, while it is state law, it is a very effective tool. And it's one that I think we've shown is effective. And we've shown most people are not losing properties due to tax sale. I mean, the vast majority of liens are redeemed. The other thing is just the potential of a property going to tax sale. I think Stan had data earlier that shows most people, once they get that notice, and again, we provide several notices, they then go ahead and pay up on their taxes to avoid tax sale. So I think, while it is state law, again, we find it very effective, and it's really the only tool that we have to collect these unpaid taxes.
Sure, but well, first of all, I don't think it's the only tool, right? Because otherwise we would never get people to pay other types of taxes. But yeah, I mean, I'll accept your premise that in most cases, people aren't actually losing their homes, but there are still people that are losing their homes. And we've long since gotten past the point or to the point of recognizing that it was, for example, morally wrong for us to throw people in jail because they didn't pay income taxes. I mean, at some level, and maybe this isn't a question for you, I'm sorry. It just seems morally wrong for me that we still do this. Can I ask, if we made this optional instead of mandatory, do you believe that counties would continue doing it in the same method?
I think counties find it as a very effective tool. And again, I think, we've worked with the committee and with Chairman Kaiser on, ways to refine this process, and we're always willing to do that. But again, I do think it's a necessary tool for counties to collect unpaid taxes. Again, if we're not able to do that, the concern is that rates go up for others. And again, I can let Daniel comment on this if he wants to. He's really the boots on the ground when it comes to this. But I think counties would still want to have this tool available in the toolbox as a way to make sure that they're collecting any unpaid taxes.
Thank you, Mr. Chairman.
Thank you. Delegate Smith.
Thank you, Mr. Chair. Thank you for the presenters thus far. I just wanted to drill down a little bit about the fact that we do have some data gaps, but even taking that into consideration, I know we don't have everything. Stan, thank you for your overview, at the beginning, but it seems to me that there's probably a need for a really deep dive as to what's happening to that group of people that really are losing their homes. I know that in the overall pie, they are the minority, but for the people in that sliver of the pie, their lives are obviously being upended, particularly if we're talking about owner-occupied situations. I'm appreciative of the work that's being done in the ombudsman. I can never get that word out. In that office, it's a very important office to help folks once they're kind of facing the realities of, tax sale, how they can get on a path towards redemption. But I'm concerned that even with an office like this in existence, it's still a reactive posture for us at the state. I don't feel like we're really drilling down into what are the other interventions that might need to happen for example, legacy homeowners that, maybe people just don't have enough income. Maybe this is a home that's been in a family, there's just not enough income in that household right now. And I just want to know, what types of kind of data are we either at MACO or at the state trying to obtain around the households that are losing their asset, the biggest asset their family probably has ever seen, and what does it suggest around the necessary policy interventions that we might need to imagine? Not, I understand that there are going to be people here that are really concerned about preserving access to tax sale, but I think that's, I don't want us to foreclose our creativity around how we could prevent people from being in a posture where they're going to lose the biggest asset their family's ever seen. So I guess my question is this: where is the data prioritization of what constitutes the different metrics or considerations that are getting people to the point that they're losing their home? What type of investments are we trying to make to prevent it from getting that far? And what type of policy solutions can we look at elsewhere, even outside of the state of Maryland, to prevent people from being in that position? Thank you to everyone for their time and diligence on this matter.
So I can say I think the goal here is to collect data on a number of demographic indicators, and particularly owner-occupied properties. And that is something that is important so that we can understand the full picture and that we can, again, refine this process moving forward. But I believe that the ombudsman and the data that counties will provide to the ombudsman does include a number of demographic indicators, as well as, again, I think the most important piece of this is the occupied properties, right? And that's really where we need to make sure that we're providing those resources and making people aware of the programs that exist to help them. So I think that the Ombudsman's office and legislation from last year will really help to move the ball forward on that front.
Delegate Polakovich-Carr.
Thank you, Mr. Chairman. So in Stan's presentation, he included information that some counties choose to include unpaid utility bills as part of the tax sale process, but some don't. So to me, that seems kind of like a natural experiment to see what other mechanisms can work to recoup basically those unpaid and back fees. So I'm wondering if anyone from MACO can provide some information about what the counties that don't use tax sale for unpaid water and sewer bills are doing to collect that money. And if there's any data to indicate, is that working well or not?
Daniel, do you want to address this one?
I think they mentioned, thank you for the opportunity to speak today, but I think it was mentioned in Stan's presentation that there were only 3 counties currently that do not collect utility bills through the tax sale mechanism. That was Montgomery County, PG, and I think Charles County. I believe Montgomery and PG are lumped into the WSSC water collection, so I don't know that they have the jurisdiction to offer tax liens on those. I'm not certain about Charles County, but for the vast majority of counties, the tax sale process is a very beneficial tool for the utility departments to collect accounts that otherwise would not be collectible.
Mr. Chairman, I can just briefly add in response to Delegate Plakovich-Carr's question. I understand that WSSC has a significant billing department that is staffed to pursue these things, pursue unpaid water and sewer charges. I don't know how Charles County does it, but we can look into that for you.
I think that'd be great. Plakovich-Carr, was there a follow-up? Okay. Delegate Branch.
Thank you, Mr. Chairman. My question is simply that earlier in the presentations, I heard that some residents will come to the office for help. Are there any, all of the tools all of the same tools being used across the board to collect this information? Because I know in some situations, it's too late for a person to retrieve their home back after it has been sold in a lien, or they've already lost their homes due to not being maybe as computer literate or knowing how to reach out and get the resources. So sometimes I know that the tools that are being used, I can just say in Baltimore City, sometimes aren't the greatest ways of collecting data, and sometimes it could be on their part and not necessarily the homeowner's part. So I just wanted to know if the same tools are being used across the board for every county.
I don't know if that's a question for the ombudsman. I believe the ombudsman is working with every county to provide those tools. Again, I think counties nobody wants anyone to lose a property to tax sale. Nobody wants a property to go to tax sale. So the tools that are provided by the ombudsman, that is a statewide effort working with each county. And then again, counties have their own efforts in each individual county to sort of get the word out and make sure people are aware. But I think that's why the ombudsman is such a beneficial tool for all counties, because it really is a statewide effort. And it provides that centralized clearinghouse to make sure that each and every county has access to the same information. And it's really just another tool for us to access to get it to our residents as well. So I think the ombudsman is definitely a statewide outreach effort. And again, it's benefiting all counties at this point.
Okay, are there any other questions?
Mr. Chairman?
Yes, sir.
I remember Delegate Feldmark had asked earlier about how counties determine the interest rates. I don't know if Mako can respond to that question. Maybe Mr. Lewis or Ms. Fox.
Daniel, do you want to address, at least just for Frederick County? I know we have Baltimore City here as well, and I'm sure they can speak to that at the local level.
Yeah, so thank you again for letting me share. Frederick County's interest rate on tax liens is 8%. So we are on the lower end of the spectrum when it comes to tax liens. However, we have a very high success rate in selling liens, even at the lower rate, regardless of what, I'll say competing liens there might be in other jurisdictions in Maryland. At this past tax sale, we sold over 98% of the liens that were presented, again, at the much lower rate than Montgomery County, Baltimore City, et cetera. So I don't know that the interest rates that are available on these tax liens is a deterrent regardless. Yeah.
Okay. We appreciate that, and we appreciate you all's time. Thank you so much for today. Next up is Baltimore City, Pedro Aponte and Michael O'Leary.
I don't hear Pedro. This is Michael O'Leary. If Pedro's not there.
No, he's there.
I'm here, but I was mute. Sorry about that.
Okay.
Again, what I was saying is thank you so much for this opportunity to speak with you all, especially on this topic that is just very important for the city and for all jurisdictions of the state. I'm joined by Mara James. She is our legislative and engagement lead and the deputy director for revenue collections for Baltimore City. I don't have a presentation with me, but I would like to explain my presentation in 3 or 4 topics. The first one is just how the tax sale process works for the city, and I will address in general terms, tax sale is tax sales make a huge impact in taxpayers. At the beginning, when people give a legal notice or a final bill legal notice, that is a red flag for them to pay taxes. And we normally see a reduction on delinquent amounts of almost 70% between a legal notice is sent to when tax sale occurs. So the way the tax sale is structured for the city, in October of each year, the city sends legal notices to delinquent taxpayers from prior years, and especially from the district. Then in February is when the current year delinquent notices are sent to taxpayers for the present year. In March, the city publishes in at least 2 newspapers the list of property that will be subject to tax sale. Now in April, mid-April, and by the end of April is when the taxpayer has the time to pay their outstanding balances before going to tax sale. And normally the tax sale occurs in May. I say normally because given COVID fiscal 2020, the city made the decision to postpone the tax sale. We are one of the jurisdictions that decided not to go with tax sale in May, which is normally mid-May, late May. We delayed it by until July. What was the response to that delay? The financial side, which is where my expertise lands, we didn't see a drastic reduction in the collection through the year especially for property taxes specifically. We normally, during the tax sale process, we collect about 1% of property taxes. And we are proud to say that collection rate for the city in general is pretty high, about 98% collection rate in real property tax. So that 1% is something that we account and we budget for that's going to be collected in tax sale. So the delay in fiscal 2020, we were able to accrue that money, and that money was recognized for fiscal 2020. And we didn't see a material difference in the number of liens that were sold or the individuals. And we didn't see an increase in the number of individuals who participate in tax sale or liens were sold to outsiders. But I think a very important initiative that was, I think, a consequence of COVID is what Councilwoman McCray introduced a legislation trying to help individuals who struggle, especially legacy property owners. So she introduced a legislation that we work very close with her and try to come together with something that was, in our opinion, a great product to offer for residents, especially elderly individuals, and is fiscally responsible. We consider that is fiscally responsible because we were able to manage to cap the amount of money. This is an exemption that's going to be granted, exemption from tax sale that's going to start in fiscal 2022, July 1st, 2021. And not only I can explain a little bit more what the details of this legislation are, but I think the more important aspect of legislation is what is going to come later and what the next steps are going to be, especially for the financials that might be carried over many years after COVID, and how we can proactively identify things that we can tackle and try to avoid people going to tax sale, especially older, low-income people. One of the struggles I think that has been mentioned with several of the presenters, that data, how we manage data in order to be more proactive and try to identify individuals who might be potentially going to tax sale. We are talking to the state right now. As a matter of fact, we will meet with the Bureau of Revenue Collection tomorrow, because one of the items and that we lack internally in the city to identify individuals, besides the face value of the property tax, which says nothing about the person behind the tax bill, is age and income. I think the legislation that Councilwoman McCray put together and passed try to tackle those items pretty well. But in order for us to be proactively and trying to reach out to people who might be in tough situation, financial situation, avoid the long-term process of potential foreclosure, is getting data so we can get information from the individuals and match to our own internal data and see who are they, what we can do, how can we reach out to them. Another important aspect we're gonna be working on, which is an extension bill that Councilwoman McCray put together, is the way it's structured is it's gonna be we cap the amount of exemption from tax sale at $2 million. That $2 million includes certain operational costs that we have to carry in order to move forward this program. That means we have to hire people, we have to get equipment so we can actually help those who need. But we're gonna try to take advantage of the House Bill 396 that passed in the General Assembly in 2019, and come with a potential program that's going to be a payment plan. And this is not going to happen this year for sure, but we're going to start working on it and try to design something that might help individuals to have more flexibility on paying the taxes and eventually reducing the risk of tax sale. The Finance Department is willing to closely work with City Council in this type of legislation. We're going to take actions, and we're going to take all these resources that we have in order to move forward with these ideas and the implementation of the council that was just recently passed. I don't have other items to speak, but I will be more than glad to answer any questions. I'm sure you have a lot of questions. So I stop right now, and I'll be answering your questions.
Very good. Was Mr. O'Leary speaking, or he's just there to answer any questions?
I think he's going to be presenting.
I can go and present now if you'd like.
Yes, please.
Okay. Good afternoon. My name is Michael O'Leary, and I run the Tax Sale Coordination and Prevention Services Program in the Baltimore City Department of Housing and Community Development. I've held this position since it was created in 2015 in response to recommendations in the Able Foundation's October 2014 report, The Steep Price of Paying to Stay, Baltimore City's Tax Sale, the Risk to Vulnerable Homeowners, and Strategies to Improve the Process. I focus on helping low-income homeowners understand what tax sale is, why, when, and how it happens, and how to avoid it. And I do this well in advance of tax sale to give people time to prepare. Reducing outstanding bills before January 1st is key. And once tax sale liens have been sold, there's little I can do to help. When I train, I promote and provide handouts on the annual tax sale clinics run by the Pro Bono Resources Center and Maryland Volunteer Lawyer Service, the MVLS program, My Home, My Deed, My Legacy, PBRC's annual tax sale resources guide, my one-page information sheet of important tax sale dates, tax sale facts and resource phone numbers, and information and applications for the homeowners and homestead property tax credits. I train people directly in community and neighborhood-based groups and senior centers, and indirectly by training those who closely interact with homeowners, senior center managers and staff, 211 United Way call center staff, Enoch Pratt Library branch managers and resource managers, City Health Department Division of Aging and Care Services, Maryland Access Point call center staff, Housing and Health Department field program staff, and programs like Hubs, housing upgrades to benefit seniors, with social service coordinators covering 5 areas strategically located across the city. For the Division of Aging and Care Services, I update the notification letter they are required to send annually to those older homeowners on the final bill and legal notice list, and I provide that list to them when it is generated. I also provide it to Hubs. I provide the list of all homeowners receiving FBLNs in each council district, including those older homeowners, to each council member, along with resource handouts. I've also worked with mayors to produce PSAs promoting the homeowner's property tax credit. I work closely with the city's Department of Finance, Department of Public Works, and Environmental Control Board to understand problems that individual homeowners have, as well as with the city council members looking out for their constituents. I'd like to say in closing that the key to reducing the numbers of vulnerable Baltimore City homeowners in tax sale each year is to get them as much help as we can before January 1st, when the annual tax sale clock starts ticking. The work I do is important. The resources I provide are important, but we must make financial assistance, such as property tax credits, easier to receive if we are to reduce the numbers of vulnerable homeowners at tax sale risk. Thank you.
Thank you. Are there any questions? I don't see any. Seeing none. I want to thank you all so much for your presentation. And we appreciate the work that you guys are doing. And I'm sure during this upcoming session, you will definitely be hearing from us as we start to work on legislation for 2021. So thank you guys so much. Next up is Odette Ramos.
Hi, good afternoon, everyone. Mr. Chair and members of the committee. My name is Odette Ramos. I'm the Democratic nominee for City Council in the 14th District, also the former Executive Director of the Community Development Network of Maryland. And that is the role that I've worked with most of you on. Before I start with remarks, I'll just say I'm not an official of the city at the moment, and I don't speak for the City Council. What I will be speaking about is my prior activism on this and the next steps and some of the things that I'd like to see, not just from the General Assembly, but also from our council. So first of all, I want to say great work by this committee, frankly, in the last few years on tax sale, and there's more to go. I wanted to focus my remarks on quickly on in 2017, many of you in this committee were involved in a tax sale task force to study tax sale in Maryland. And we came up with several recommendations, many of which have already been implemented, including making sure that there are payment plans for water bills, making sure that in other jurisdictions, that in every jurisdiction, that if a tax bill or water bill is at 750, the liens are at 750, that those residents will be taken out so that the jurisdiction can work with them. And then also making sure that some of the tools around vacant properties, because tax sale is multidimensional here. It affects obviously homeowners, which we really want to prevent, but it also affects the vacant properties because there are often properties going in and out of tax sale through the system without any resolution, because if the liens get higher than the property, then it's, you know, not worth it even to bid on the property. So we passed many tools in the General Assembly, thanks to all of you, including an MREM method of tax sale where the jurisdiction can now foreclose on the liens rather than having the vacant house, this is just for vacant properties, be put through the tax sale all kinds of times. And then also a lot of tax sale protections, including better notices, but clearer notices, and making sure that people can get help. And then Madam Chair put in a bill 2 sessions ago, 1209, to add to those protections that we already had to make sure that also that there's the state ombuds, which I'm so excited to hear from Mr. Yeager how things are going and how quickly they were able to implement, but also to enable jurisdictions to take out the elderly, the low income, and also the elderly, low income, and people who are disabled. And as Mr. Aponte said, that Baltimore City appears to be the first one to implement that particular clause in that legislation. Baltimore City is also the first to implement the NREM that I described earlier, and that passed in this year's council as well as another tool to address our major vacant properties. So I wanted to just say that this is important work that this committee and the General Assembly has been doing, and it's been bipartisan. Senator Eckert was part of this, and she certainly was a leader in the Senate on these issues. But there is a lot more to go. I really appreciate Delegate Lutke's questioning around what is the better way to do to collect property taxes from our residents. We heard testimony that a lot of times there are the tax sale certificates are actually redeemed, but you know what? Those residents are actually making really tough choices between paying for healthcare, paying for food, and paying to save their house. And that's, to me, a very false choice. And so it is certainly my crusade to continue the work that has been done through the Community Development Network and all of the advocates to completely reform tax sale, because I think that it is something that has been predatory. And I'll just say it, that's how I see it. And I think that it's important that we think about other ways to work with our residents. The payment plans is excellent, and we want to work with Baltimore City to make sure that, and all of the jurisdictions to make sure that payment plans are in place. They're in place now for water in many cases, but not necessarily for property taxes. And so I think it's important that the General Assembly know that there's still more work to do on this issue, and I'm grateful for your leadership. And I look forward to working with all of you, both at the local and the state level, to make these changes to help our homeowners, particularly our legacy homeowners, to save their homes. Thank you very much for your time.
No, thank you so much. And yes, we understand that there's a lot of work to do. That's why we're here today, as we try to obtain as much information as possible to ensure that we're moving this committee and the state in the right direction. And also congratulations on your pending nomination for Baltimore City Council. We appreciate all that you have done and being a staple here in Ways and Means. So we thank you. I know we have a question, Delegate Patterson.
Thank you very much, Delegate Barnes. This is sort of back to answer some of the questions relative to Charles County. We are a code home rural county, and so we do not combine our water and sewer bills with property taxes, but the county, the water and sewer bills are not collected through tax sales. However, if the bills, both water and sewer, are delinquent, there will be liens that the county will place on the property. In addition, regarding the interest rate, because we are code section 281-9 sets a 1% penalty for taxes that are late or in arrears. So that's the report from Charles County. Again, because we are code home rule, our regulations and legislature is a little bit different. Thank you.
Yes, ma'am. Thank you. Delegate Philmark.
Thank you, Mr. Chair. And I'm not sure who could best answer this question, but one of the points Odette raised helped me articulate an issue I was thinking of, and that is, do we have data on comparing the amount of the lien, right, the amount of taxes actually owed versus the total cost of redemption, right? So when you add in interest and whatever fees and reimbursements go with that, I'd be interested to see how those numbers compare and what the actual cost is. I'm concerned about, obviously concerned about people losing their homes, and that's the most catastrophic impact. But the cost that is can be predatory. What is that cost actually impacting homeowners?
Delegate Feldmark, I can respond to that a little bit. The data on the liens, the amount of the value of the liens sold, that includes interest and penalties up through the time of sale. But we don't have any data on the amount of redemption interest that homeowners or property owners may have to pay after the sale. And then all of those fees that we mentioned earlier for the reimbursing the purchaser for the expenses in preparing or bringing a foreclosure action. As I mentioned, that can be thousands of dollars and can easily be more, and maybe considerably more than the actual tax debt. We don't have any data on that either in terms of how much property owners ultimately end up paying to redeem. So that's something that definitely we could work on.
No, that sounds good. If there's no other questions, Ms. Ramos, we thank you for your time today.
Thank you. Thank you very much.
Thank you. Next up is Dan Ellis from Neighborhood Housing Services.
Good afternoon, Chairman Barnes and members of the committee. I'm Dan Ellis, Executive Director of Neighborhood Housing Services in Baltimore, and I have had the privilege of co-chairing the Baltimore City Tax Sale Work Group from 2012 until earlier this year. The focus of my remarks will be on why we have tax sale, what happens after tax sale, and what changes are needed. The reason that we have tax sale, as we all know, is to support the collection of delinquent taxes and other fees, which is an important function for government to be able to maintain its services to clients. And tax sale is an easy vehicle for this collection, but doesn't necessarily always serve the interests of the residents to the fullest extent. The challenge is how do we create an equitable system that is effective for the long term, both at bringing about the collection of revenue that is needed, but also in serving the residents and protecting those who are most vulnerable within our communities. What often happens after a property goes to tax sale is that it is the certificate or the debt is purchased, as has been described. And most of the homeowners who are impacted are either legacy homeowners or seniors in the community. The reason for this is that if you have a mortgage on your property, you're typically going to be paying escrow as a portion of your mortgage, and that will then pay your tax bill once a year when it comes along. And so those who are impacted by tax sale are usually those who do not have a mortgage on their home, which are usually our senior citizens or those who inherited property from a family member, a parent, a grandparent, or someone else in the family. So they've usually lived in their house for a very long period of time. For a property tax that goes to tax sale, say over $1,000 lien, it's assessed an interest rate that we have seen varies greatly from Stan's presentation. But the fees that accrue in Baltimore City, where I work, the fees in 7 months, you add $1,250 of fees to that loan or that lien of $1,000, plus the interest that in Baltimore City is 12%. So what happens is in 8 or 9 months, your debt has gone that you can't pay of $1,000 has now become a debt that you can't pay of $2,500. And so families that are really struggling are really having difficulty meeting those needs and serving their families, which puts homeownership at risk and then puts legacy wealth at risk. And so ultimately what happens is sometimes they go to family and friends, they figure out ways to try to preserve it, but it's often at the cost of not being able to have choosing between whether you lose your home or put food on your table or provide medication for yourself or your family members. Displacement of residents is not an ideal outcome either if the house is lost, because that places this homeowner into a need now for tremendous amounts of social services, which cost the local jurisdiction significantly more money by having additional homeless people into the population that need to depend upon those services. For vacant properties, which we have many of in Baltimore City, when a lien is purchased, many owners don't believe they have any interest, or they don't have any interest in redeeming the property. They don't want it. In most cases, the purchaser also does not want the property. Most of those who bid on it are bidding because they want the debt and the collection income. And so as a result, it creates a limbo for the vacant properties that makes it very difficult for someone who is interested in helping the community and redeveloping a property to be able to acquire it, because you now have to work with a previous owner, a certificate holder, and the city all together to coordinate acquisition of the property, which makes it very complicated. It also can create difficulties with the title and being able to insure the title once a home is redeveloped for a future sale. So what is needed in Maryland to bring about positive changes is that we need protections from homeowners. The goal for homeowners is to move them through the process slowly. The homeowner property tax credit in Maryland is one that we should all be very proud of. It is one that is unique in Maryland. Very few states around the country have access to a program like this, and it is one that we are proud of here that provides protection. But because it is an opt-in program, the estimates are that 20 to 30% of eligible homeowners are utilizing the program because they either don't know about it or the application process is difficult for people who are more vulnerable to navigate. So changes, and the changes that Odette outlined over the past several years, which have raised thresholds and done other changes, have incrementally helped to remove and protect some homeowners. Additional protections would definitely be beneficial for the communities that we serve. Having tools that lengthen or create additional time until a property goes into tax sale would be very beneficial. Right now, jurisdictions don't even have an option if they choose to want to extend when someone goes into tax sale. That makes it difficult to coordinate and manage payment plans and other types of options that could be available in other situations. It's critical that any payment plans are set up in a way that the homeowner has an ability to repay that debt. And that is something that is going to help them be successful for the long term. So additional protections for seniors and disabled low-income residents are desperately needed. Baltimore City just passed a bill, as Pedro addressed, and it will be interesting to see what the long-term impact is, and it is a good start, but so much more is needed to help, and other jurisdictions have need for those. And the impacts of COVID on many residents is unknown at this time, how much that's going to put people into additional tax sale risk during next year's tax sale. For vacant properties, the goal is different than for home ownership. For vacant properties, we want to move properties through the process as quickly as we can to get them returned to productive use without a encumbered title, which is why last year we appreciate the support from this committee of the NREM legislation that Odette talked about, which created a new system for tax sale. But an additional tool that would be critical is the promotion of and continued expansion of land banks in Baltimore or in Maryland, and having those available regionally or locally to receive the flow of vacant properties will help promote the flow of properties back to productive use. In conclusion, I want to thank you, Delegate Barnes, for your leadership and members of committee for interest in this issue. Thank you very much.
No, thank you so much for your presentation and your patience for presenting to us today. Are there any questions? I don't see any. Thank you, Dan, so much for your time. Next up is Ms. White from Maryland Consumer Rights Coalition. Are we ready?
Mr. Chair, I don't see Ms. White on the meeting anymore.
Yeah, I know she was on there.
I'm right here. I'm right here. Can you see me? I can.
Yeah, we see you now.
Okay, great. Sorry, next slide, please. This is just who MCRC is. We work on economic rights and equity and have been in front of this committee a number of times. Next slide, please. I wanted to talk and focus my remarks on our Securing Older Adults Resources Program, our SOAR program, to give you really a snapshot of some of the problems we've seen with tax sale, both in the past year and what we've tried to do to mitigate it, and give you a little bit of success stories and narratives. So we've certainly been involved in many of the legislative activities that Dan and that Mr. Ellis and Ms. Ramos have remarked on. And I want to talk about the direct service program we have been engaged in. So it's, again, SOAR. If you can go to the next slide, please. The program and the focus I'm going to talk about is on the homeowner's tax credit. And I'm talking to you today about the homeowner's tax credit, which we know is a signature program in Maryland, because what we've found time and time again is that many distressed homeowners who are facing tax sale are able to receive enough back in credits to be able to use that money to get out of tax sale, basically to use those credits from the homeowner's tax credit to be able to redeem their homes from tax sale. So other people are going to talk about legal strategies. This is the strategy we use as a direct service strategy to assist people who are facing tax sale and other low-income homeowners who can get money back from much needed goods and services. Again, what we do is our program helps people through screening people for tax credits, just first of all, seeing if they're eligible. We also help people apply for credits. And I noted we have a lot of high touch clients. And what that means is we have a lot of people, again, we focus statewide, but in Baltimore City, as many legislators are aware, there's a huge digital divide. So we have a lot of older adults and people who are eligible for tax credits in the city who don't have access to a computer. So we will go and meet with them at a senior center or meet with them at, oftentimes even their homes, but meet with them in a variety of locations to help them physically fill out the paper. And we also help people with follow-up. So many times if an application for a homeowner's tax credit is rejected, we'll follow up with SSTAT, with the ombudsman, in order to find out what the problem was and help people reapply. So that timeline is very critical so that people have enough time to both go through the process, get their application in, and then we can apply again or fix whatever problem happened in order to make sure they get the credits. Again, as Mr. Ellis mentioned, what we've seen is often only 10, maybe 20% of eligible homeowners have taken the credit. Many don't know about it still. There's still a real lack of awareness. Many confused with the homestead credit. Many others were unaware that it was an annual credit and they could take it every year. So one of the things we do is everyone who has gone through our program over the past 4 years, we call back in February to just give them another touch point to remind them to apply again and either come in and meet with us or to do it online or work with a family member to apply. And again, for us, this was a way to focus on helping people out of tax sale. Older adults particularly can apply for retroactive credits. So often that amount is enough to get them out of tax sale. And it's an important annual process and program. Next slide, please. We have a website, marylandtaxcredit.com. We have on the website a video just informing people about how to take the credit. We have a relationship with 211, so people refer to our organization if they need direct assistance with the credit or screening. We have brochures on there. We also do a lot of marketing, again, to raise awareness. We have bus sides, bus interiors. We also have paid media and earned media. We have partnerships with Enoch Pratt, with Cash Campaign for tax promotion, with senior centers, with
food distribution centers, and with a number of other partners to distribute brochures. We usually do tabling. Obviously, this year, a lot of the activities have moved online, and we actually spend more time on TV and radio ads this year because we knew we couldn't be out and about in the community as we normally would be. You can also go on there to find out if you're eligible, to download an application to fill out. You can estimate your savings, and you can go and zoom in and see if you've applied for the credit before. So that's just the taxcredit.com. Next slide, please. I just want to tell you a little bit about the activities this year. So 9 clients referred to us for help with tax sale. They had homes in tax sale. And this is a little picture about our clients, so you get a sense of who we're really talking about. 70% were female-headed households. 100% of those facing tax sale were African American. The average age of the clients was 71 years of age. The total value assessed on the homes, and that's of all 9, was $868,933. And their average income was $17,484. So what you're seeing again is these are very low income. These are oftentimes widows who own their home outright. They have the equity in the home. They just don't have that $1,000 plus fees and interest to pay to get their home out of tax sale. So again, this is an issue of legacy wealth and intergenerational wealth, but this is a good snapshot of the kinds of clients that are really distressed. Again, going back to Delegate Lukey's issue about who is being affected by these tax sale issues and who has to then find the money to redeem their owner-occupied homes. Next slide, please. So we returned $10,119 to those clients, which is enough for many of them to have redeemed their homes. Some we're also working with for retroactive credits because they are eligible, so that the amount that we are able to return in its entirety should go up. If we found some of the people whose tax sale debt was higher, we actually refer them to NHS, to Mr. Ellis, to apply for a small dollar low-cost loan. Legal Aid was the group that referred the clients to us. And I will note that this is higher than the year before when we had 4 referrals for tax sales. So again, the tax sale system has paused, but a lot of these came to us in, April, May, when the situation was very unclear about what was happening going forward. And then we worked with them at that time. Next slide, please. So I just want to show an increased demand from 2019 to 2020. And this is for all calls to our website. So it's not only tax sale, but it's really for the homeowner's tax credit. It's also for financial counseling and coaching. So I want to be clear what we're looking at, but you can see a huge increase in demand. From 2019, our website got 7,750 views. This year it got 11,000 views. So 42% increase. Our hotline calls increased 171% from 437 in 2019 to 1,185 calls. And to be clear, every call is returned, and every call either gets a screening, usually an in-person meeting, now a phone or digital meeting, virtual meeting, and is either we work with them, we refer them, or we set them up for financial counseling and coaching. Last year, we screened 153 people for homeowners tax credit. This year, 310. So 102% increase in screenings, and mailed 310 applications, which is a 93% increase in applications mailed for the tax credit. So the good news is people are more aware. The bad news is you probably see this is also an indicator of deeper financial distress and concern during the pandemic. And there may be people who were laid off or newly retired who may be eligible that weren't eligible before. Next slide. So just the summary is you can see there's a lot of actors involved, from the state and the city ombudsman to direct service organizations like ours to legal service organizations, which you'll hear from, all working together to address this issue of tax sale. But just calling on the legislature and this committee, I do believe more needs to be done. This is addressing the immediate need, but it doesn't address the long-term issue. And we need more holistic reform on tax sales. Again, if you think about people getting $1,000 back, $750 back, from the homeowner's tax credit. It would be great if they didn't have to spend that on redeeming their home and instead could spend that on food or medicine or other kinds of basic needs they have when you look at the kinds of clients we serve. So with that, I'd like to end, and just next slide, if you have any questions, I'm happy to answer them now, or you can reach me in all of these ways.
Ms. White, we thank you so much for your presentation and sticking with us. And I would agree that there are more that we can do, and I know we are working towards making those things happen. Are there any questions for Ms. White? Seeing none, I thank you so much for your time, and enjoy the rest of your day. Next up is Amy Hemmond from the Maryland Volunteer Lawyer Services.
Chairman Barnes, thank you so much for the opportunity to testify to the subcommittee. My name is Amy Hennon. I am the I'm the Director of Advocacy and Financial Stabilization at the Maryland Volunteer Lawyer Service. MVLS is the oldest and largest pro bono legal services provider in the state, and about 30% of our cases are consumer, foreclosure, and tax sale related. I really appreciate the earlier framing about kind of reconsidering what is tax sale and what the service tax sale serves to our state is. And for instance, if we moved to a system where delinquent taxes were paid at perhaps the sale of a property or the transfer of a property, it would really strongly incentivize counties to put a lot more effort into the ensuring that all of these homeowners that we've been hearing about are receiving the homeowner's property tax credit. Something like automatic renewal of the homeowner's property tax credit might actually be a really significant tool to ensure that those folks that need it are actually getting it. Because as we've heard before, and I have my own client stories about folks that were getting the homeowner's property tax credit, and then something occurred and they stopped getting it. And there's also so many people that are just not getting it, period, that need access to it. I want to address earlier, there was mention of how WSSC collects its water bills. As I understand, they actually use small dollar suits, mostly lawsuits, in order to collect, because they're not able to engage in tax sale in order to collect on those bills. And in a very rare instances will engage in shutoffs, but mostly not. Mostly they will file a lawsuit. And I just want to also address Delegate Feldmark's remark from earlier about the potential costs for homeowners that are redeeming their properties after it's gone through the tax sale, after this private debt collector who the county or the city has outsourced their debt collection to. So in general, the fees that we see for these can be in fact quite high. Obviously, it varies based on interest, but we often see that generally the amount the person potentially owed has doubled by the time they have gotten to the payment to the tax sale purchaser. And there is a real struggle for low-income homeowners to understand that process period, because the redemption process is a two-step process. It requires that the homeowner pay what is owed to the purchaser generally, and so that would include all the attorney's fees, which are usually in the $2,100 range, in addition to any interest that is then owed to the tax sale purchaser. And then go back to the city or county and pay the underlying tax amount, plus any taxes that have come due since that time. And so it can be a $2,000 or $3,000 tax bill can easily become $5,000 or $8,000 when it comes to the point of redemption, and become impossible for a low-income homeowner that is not to be able to redeem without either an incredible amount of help from friends or family, or engaging in a Chapter 13 bankruptcy or something like that. I just want to draw out a little bit a client that we saw earlier this year that we were able to help redeem from the property tax sale before it actually got to tax sale, and so she was able to avoid a lot of those additional fees and costs that come later in the process. But Estelle, I'm using a made-up name for her, is an 88-year-old woman, and she lives in the Middle East neighborhood of Baltimore City. She's been living in her home for nearly 60 years. She is a pillar of her community, and she's involved in her neighborhood and keeping it healthy and alive. She normally applied for the homeowner's property tax credit every year, but she had gotten sick and was in the hospital for an extended period, missed the deadline to apply, and then discovered that she was in tax sale. She began looking around her home, looking for things that she could sell in order to try to keep her home, and before she got connected with our organization in order to try to get herself out of tax sale. We were able to get the retroactive credits for her, particularly because of her age. But she is exactly the kind of person that we wouldn't want to see going to tax sale. I mean, she is this pillar of her community that we want to keep in our communities. From the data that we've collected from the tax sale clinics that we have done year over year, generally the homeowners that we see are not getting access to the homeowner's property tax credit. Generally, they've lived in their home at least 15 years, and generally they make less than $30,000 per year. So these are folks that the folks that are going to tax sale and the folks that are really struggling with this process are low-income folks. That 7% of those homeowners that are not redeeming the process, these are all low-income folks. It is folks with greater access to funds and to wealth that are able to get themselves out of property tax sale much sooner and easier. And just briefly, I just want to finally address the concept of using reverse mortgages or other loans. I almost never want to recommend that process to a client of mine because I know that for many of our low-income clients, this home is their one access to being able to create intergenerational wealth and being able to lift their own children out of poverty. And the loss of this one home is cutting off that entire legacy for them. There are alternative options, including what I mentioned before, Chapter 13 bankruptcy. It's not a great solution, but it can be useful. But what would be better is if the folks that were eligible for the homeowner's property tax credit were actually getting it. Thank you so much for the opportunity to testify, Delegate.
No, thank you so much for the presentation, and I think it was definitely useful information. I know that all the presenters this afternoon, we all learned a lot. I'm excited about the work ahead. And are there any questions for Amy? I don't see any. That concludes our presentation for the day for our members. We truly appreciate everyone's time. Please continue to be safe. And we look forward to working with each and every one of you all in the near future. Thank you all so much and have a great day.